Hey guys, what's up? Welcome to my channel where we provide many tips on how you can become a smart retiree. So, is this you? You're working at least 8 hours a day. You wake up early, drive to work, drive home, and collapse into a big heap. Imagine doing this 5 days per week, week in, week out for the rest of your life. Is that what you call living the dream? On this channel, we will teach you how to break this cycle. Let's retire early. Let's become a smart retiree. But first, be sure to subscribe to the channel and hit the bell icon to get regular new video updates. Did you know that most wealthy people do not believe in cash deposits in the bank? While it is safe in the bank, cash in the bank can gradually lose its buying power over time. And in the current economic climate, that's happening faster than it has ever happened before. With the rising prices of goods due to increasing inflation rates and the non-moving low interest rates offered by the banks, your cash in the bank could almost become a liability rather than an asset. In today's video, we will teach you which assets to consider investing your cash in to yield more returns and help you reach retirement earlier. The first is gold, silver, platinum, or the precious metals market. Why gold and silver? With the increase in inflation rates and continuous increase in interest rates, it is predicted that the price of gold and silver will continue to increase. In 2024, it is predicted that the price of gold could hit a historical peak, exceeding $2,300. Silver is best for investing defensively. Like other precious metals, silver protects wealth against inflation. The stability and utility of silver makes it a good investment. Silver is used in several industries including dentistry, medicine, LED chips, and semiconductors. Approximately 50% of annual silver supply is used in industrial applications. Platinum can actually be better than gold when it comes to short-term investments. When manufacturing booms, platinum prices also shoots up, giving you greater returns. So reassessing your cash investments to include precious metals could be a smart investment move. Number 2. Art. The best thing about investing in art is that it increases in value over time because of its stability and rarity. The global art market grew by 29% during the pandemic, when all other types of investments drastically dropped. Unlike other types of investments priced to rises and drops, art investment is considered stable. One more thing, good art is unique and scarce, but you do have to be careful in purchasing art as an investment. Why? It is not liquid, it is a long-term investment. Investors usually acquire art to pass it down to the younger generation in a family. You also need large sums of cash to start acquiring unique and rare art. But if you have lesser cash on hand, worry not. You can own a share in high-value artwork by fractional investing. In other words, you earn a share in the proceeds when the artwork is sold. Now, that's a smart move. Smart retiree. Number 3 is commodities. Yes, there is a future in going back to basics. Commodities are basic goods essential for transformation to other goods. The demand for commodities is always high because of its wide range of uses. In recent years, commodities have become a reliable investment by investing on them through futures contracts. Commodity futures result in higher returns because of its volatility, depending on the supply, demand, and prices of the underlying commodity. Is there one commodity future to consider investing in? Oil. Oil is undeniably an abundant and popular commodity. No modern country would ever lose its interest in oil. But investing in oil, by purchasing in the spot market, requires a larger than normal cash flow. So how can you invest in oil with little money? Oil futures. In futures contracts, you're basically speculating the price of oil at some later date. Hence, this can be extremely volatile. You can yield greater returns when you analyze the market carefully. So, be smart and proceed with caution. Seeking advice from an expert should be your first move if you are considering investing in oil futures. Number 4 is luxury handbags. Yes, I said luxury handbags. Women are always right? Well, at least when it comes to choosing handbags. If you have been a smart man and bought her the gifts she has been hinting to you about, then kudos to you. A luxury handbag can be the best companion when traveling and is one of the smartest investments you can make. So, what handbags should you consider owning? Topping the list would be the 1930 Hermes Kelly. It's timeless, not just in style but also in value. The scarcity and exclusivity of an Hermes Kelly is what makes it more valuable. The demand is always high. As of 2024, it's likely you will have to pay up to 10% more on the price of a Hermes Kelly than in 2023. That's an impressive increase in your investment. Then comes the Hermes Birkin bag, designed in 1984. Just like the Kelly, it's not easy to own a Birkin as the waiting list is increasing and in many cases only offered to select clients. In 2022, Hermes announced a 5 to 10% increase in the prices of Birkin to compensate the increasing inflation rate and the global pandemic. This meant that owners and collectors of Birkin bags just made a profit by the mere appreciation of the market price. What a way to earn passive income. But if you're considering a luxury handbag, be warned the price can range from 4 figures to high 6 figures. The fifth is value stocks. Value stocks, simply put, are shares sold at bargain prices when a company experiences an unfavorable situation. This is the opposite of growth stocks, where investors would reinvest their earnings to ensure capital growth. Profit is made upon the sale of the stocks. Value stocks have higher dividend yields and low price to book and price to earnings ratio, where investors intend to hold them for a short term only. So, what value stocks should you buy now? Smart tip number 1. Buy value stocks from companies with a stable, high dividend yield, but which are temporarily in an adverse financial condition. And smart tip number 2. In 2023, value stock prices of financial services, healthcare, energy, and technological sectors were favorable at the time of recording this video. Number 6 investment is real estate. Investing in real estate offers stable and high yields, tax benefits, and a hedge against inflation. It's predicted that from 2023 to 2028, the real estate market will increase by 3.5% annually. That follows on from huge gains made just in the past 3 years. The 7th investment tip is vintage cars. New is not always better, especially when you're talking vintage cars. The value of some vintage cars has appreciated by over 500% in the past few decades. That's quite remarkable. But know that this type of investment can be high risk despite its high return potential. And it also requires money for upkeep and maintenance. While attractive, you still need to be car savvy to appreciate and analyze this niche market. One more smart tip on vintage cars. Carefully study the vintage car market. Research the cost of maintenance and, well, be ready to take a few risks. Number 8 is land. So, what makes land a good asset? Scarcity. No one can produce or reproduce land. Hence, its value only appreciates over time. If you're asking if 2024 is a good year to buy land, the answer is yes, but only if you do your research. Areas to study include land on or near the beaches or lakes. In fact, land around most sizable waterways should be studied carefully. Once an area on or near a waterway starts to attract attention, you can bet investors will earmark it as a potential investment opportunity. In many cases, prices are driven up by the fear of missing out, and if you're invested, the profit potential can be impressive. Are there areas near water you've had your eye on that might provide a nice return on investment in the future? The last tip is wait for it. Livestock. Livestock has suddenly become a good investment as people search for more stability, high returns, and to diversify their assets. And its popularity is even more evident now in these uncertain times. The purchase of livestock at a young age at value prices is still very much available today. Profiting from livestock investment is not only available through the sale of it, but you can earn money through its byproducts such as meat, dairy, eggs, leather, and yes, even manure, which is used for fertilizer. This may not be for everyone, but a little research and homework on this investment type could be fruitful for years to come. So, which asset would you love to invest in? Let us know in the comment section below. And for more ways to be a smart retiree, just click the subscribe button below. And don't forget to hit that icon bell to get our latest uploads. Thank you for watching.